We're going to make housing prices skyrocket, rents skyrocket, gas prices skyrocket, and food prices skyrocket. Wages will skyrocket too, right? Wages too, right? It's so stupid. Well, it's not really crypto related, but well, never mind. Doge is going to skyrocket to the moon. All right, we got to start off with a meme. This is again by Billy, one of the co-founders of Dogecoin. He's no longer on the project, but whatever. So we got to start off with a meme just because it's so dumb. What's up, guys? This is Chris with Leveling Up Your Finances. And yesterday we went over like the top crypto exchanges out there. Today we're going to actually, for beginners, we're going to talk about what a crypto exchange is and how does it actually work. Again, this is going to be like dumbed down a bit for beginners. Some of this terminology you may have just never heard of. So we'll just cover all that type of stuff. Not trying to insult anybody's, intellect, but however, when you first start out in crypto, you don't know anything about anything. We still don't know anything about anything, even though I've been in here for 5 years. I still don't know anything about anything. So let's just begin. So what is a crypto exchange and how does that work? We're going to also go over fees, that type of stuff as well. A crypto exchange is a marketplace where you can buy and sell cryptocurrencies like Bitcoin, Ether, or Dogecoin. Cryptocurrency exchanges work a lot like trading platforms. So if you have buy stocks or do anything like that and you work on your own, it's pretty much very similar depending what type of platform you're using. They provide you with accounts where you can create different order types to buy, sell, and speculate in crypto market. Some crypto exchanges support advanced trading features like margin accounts. Definitely don't recommend that for beginners. And futures trading, again, don't recommend that for beginners as well. But thankfully, these are less common in the United States because we're crazy over here and we will just gamble all of our money away. YOLO. Others have features like crypto staking and crypto loans that allow you to earn interest on your crypto holdings. And the best exchanges offer educational offerings to keep you up to date on all things crypto. And a lot of people overlook that educational part, and I think that's one of the best features on some of the exchanges, like even like crypto.com or Coinbase. Yeah, it's a very small snippet of like what really each coin is or whatever they're trying to teach you, but it definitely helps out, and it just like immerses you in that the terminology, kind of like the area, and you like don't even on it. So I definitely recommend like those ones as well because they're very good with that. And they do a better job at explaining stuff than I do. So different types of cryptos exchanges. Basically, there's just two different types. There's centralized exchanges and decentralized exchanges. The video we put out yesterday was centralized exchanges. That just means it's managed by one organization. Centralized exchanges make it easy to get started with cryptocurrency trading by allowing users to convert their fiat currency. This is dollars directly to crypto. And a vast majority of crypto trading takes place on centralized exchanges. And if you're first starting out, obviously I recommend just using a centralized exchange, unless you're one of those people that's super like weary of the government and want to hide money or whatever, some of that shadier stuff. You don't need a central or a decentralized exchange if you're not one of those people. So centralized is good. If you're going to pull crypto or like try to swap it and then, I don't know, like evade taxes, which I don't recommend, then maybe you want a decentralized exchange. But some crypto enthusiasts object to centralized exchange because they go against the decentralized ethos of cryptocurrency, which I agree, because the whole point, like crypto is nice, is because it is decentralized for the most part, like Bitcoin. However, if you're just in this to make money, centralized is more than enough for you. The company or organization may require users to follow the know your customer rules, and you can go check this out. I'll put the article in here and everything. Some of them is kind of a little bit shady. It's a little bit of privacy issues and a little oversight, too much oversight, I mean. So just know that. This requires each user to divulge their identity, which is fine unless, again, you're trying to be anonymous to combat money laundering and fraud. Yeah, usually if you're trying to be anonymous, you're doing it for a reason. And it's usually not a good reason. However, I do use DeFi for other things besides money laundering and fraud. Silly. Another concern with centralized exchanges is hacking. There has been there's a record of exchanges getting hacked lately. Exchanges holds the crypto traded on the platform generally, at least in the short term. while trades go through, raising the risk of hackers stealing your assets. So again, if you leave your crypto on the platform and you don't put it in a cold or hot wallet, yeah, there's a chance that it could get hacked. But to address this, most of the top exchanges have been beefing up their security over the years, and now they store most of the customers' assets offline. So again, it's not hot or on the platform itself. And then they also now, since crypto is becoming a little bit more mainstream, they can take out insurance policies to cover crypto losses in case of hacking. So a lot of insurance companies are getting a little bit more loose and recognizing the potential need for crypto and that it's an actual asset versus just a speculative, I don't know, gamble. I still think a lot of crypto is gambling, but whatever. I'm not an insurance company, so I don't really care. If you like the convenience of centralized exchange, you can reduce your risk by transferring your crypto to a separate off-exchange, hot or cold wallet again. So decentralized exchanges are a little bit different because guess what? There isn't a central authority overseeing them. That's why they're decentralized. So you may also hear decentralized crypto exchanges called DEX. Again, when you're first starting out, you might hear DEX. It's just shorthand for decentralized crypto exchange. As responsibly for facilitating and verifying crypto trades, anyone willing to join a DEX network can verify or certify transactions, much like the way cryptocurrency blockchains work. This may help increase the accountability and transparency, as well as ensure an exchange can keep running regardless of the state of the company that created it. Generally, decentralized exchanges are much less user-friendly, not only from the interface standpoint, but in the terms of currency conversion. Yeah, because again, like there's no central person like overseeing it. When you go on some of these websites or apps, they're kind of hard to navigate because they're not, the interface is just different. You don't realize how much like time goes into planning interfaces for apps or websites that people actually do behind the scenes. In a decentralized exchange, you may not get that just because, again, nobody's really overseeing it. And decentralized exchanges don't always let you deposit dollars in the exchange for crypto, which means you already have to have crypto and you have to like basically transfer it to the exchange and then swap it for whatever you need to do. You may be engaging in direct peer-to-peer trades, which may take longer for you to find someone looking to buy what you're selling. Basically, if you put out a price on there and they don't want it, it could be sitting there for a while. Because if liquidity is low, you may have to accept lower prices for what you want to buy or sell just because of the cryptocurrency being low volume. So that is one thing to keep in mind. There's global exchanges as well. I mean, most of them are. But there is 600 cryptocurrency exchanges worldwide, which is absolutely insane. I didn't even think there was that many. So Forbes did do a ranked list of top 60 crypto exchanges in the world. Yeah, we're definitely not going over that. 60 is way too much and no one cares. But if you really want to find some of those smaller ones, go for it. All right, one very important thing is fees. I hate fees, but guess what? There's going to be fees in everything you do financially. That's how people make money besides you. Whether you're winning or losing, people are making money off of you. It's pretty cool. So there's two main types of fees. There's the trading fees and withdrawal fees. There's a couple other fees in there, but we'll cover those as well. However, for trading fees, trading fees, like it says, they may be charged as a flat percentage of the amount of crypto you buy or sell, or an exchange may differentiate between orders that are makers and then those that are takers, charging a different percentage accordingly. Makers are the orders that add liquidity to the exchange, so it's basically like buyers versus sellers. It'd be like sellers versus buyers, in this concept. Takers, meanwhile, remove the liquidity from an exchange by completing the order that it's waiting to be traded. So depending on the exchange, maker fees are usually slightly less than the taker fees, although it's not always like that, because if you're going to be taking away liquidity, they're going to get their fee out of you because they need the liquidity on the exchange, if that makes sense. You can read a little bit more, but you're better served considering overall fees and any discounts available for trading a certain amount each month or holding exchange native cryptocurrency. So a lot of exchanges have their own cryptocurrencies. So if you're trading and swapping back and forth, but you're using their native cryptocurrency, a lot of them do offer those discounts. I can't remember if they still do it, but it's something like crypto.com if you're using Crows, or Binance if you use BNB or something like that. Basically the concept. So you want to think of the overall fees, and then if you do get any of those sweet discounts, or you could get discounts even on some exchanges by using their credit card, their debit cards, that type of stuff, or being a pro member, whatever. So just an important note, some crypto investment apps claim to charge 0 fees, but this isn't entirely accurate. Nothing is free anymore, guys. All right. So just because you think it's free, it's not. They charge a spread. That's the difference between the rate at which they buy or sell the crypto. Because remember, you're not actually buying or selling it. It's kind of like an IOU, if that makes sense. So the spreads can and frequently do wind up being much more expensive than if you just paid a percentage trading fee. So kind of like if you think about stocks and stuff, the difference between the ask and the bid, they basically suck that in. That's how like Robinhood gets you with fees, and you just don't even know it's there. Withdrawal fees. So that's a big one too, because at some point you may want to take your money away and trade it for a fiat so you can go buy stuff or something else. So some places do withdrawal fees. Many exchanges charge these fees to take the coins from their platform. This can be an issue if you prefer to move your crypto to a secured third-party wallet or onto another exchange, which at some point you will. So withdrawal fees typically vary by the cryptocurrency. If you anticipate moving your crypto off of an exchange, then you should choose a platform that allows a certain amount of fee-free withdrawals like Gemini. So again, for the most part, you're going to exchange it at some point or take it off. So just know that before going in what the withdrawal fees are. And then again, there's some other fees that aren't as common, but this is if you engage in more like advanced trading strategies like margin trading, and then there's additional fees associated with borrowing money. So that's kind of a little bit separate. But yeah, anytime you're borrowing money, you're usually paying some type of interest or some type of fee on it. Beginner-friendly exchanges like Coinbase and Gemini offer quick buy features that charge higher fees. So that is like a convenience fee. So it makes it so easy for you to buy the crypto and understanding the interface and all that you will be paying a little bit higher percentage generally. You can avoid them by learning how to buy and sell on exchange trading platforms. Again, but when you're first starting out, sometimes that convenience is it's worth it. If you make purchases using a credit card or debit card, you may also be charged a fee like a premium by the exchange and then also by the card issuer itself. This is why it's always, or not always, this is why it's best to buy crypto with cash or wire transfers. Guess what? Wire transfers usually have a big fee too. So I don't know. Sometimes it's just easier just to buy it with just your debit card or your credit card. But again, some places will charge you fees for that. And then your credit card company might as well. So another one you want to look into is how to choose a crypto exchange. So just besides the fees, when choosing the best crypto exchange for your needs, consider things like security, trading volume, educational resources, and whether an exchange lists the cryptocurrencies you are interested in buying. Because it makes sense. If you can't find the cryptos you want to buy on that exchange, why would you use that exchange to begin with? Right? So that's if you're trying to get those smaller ones and those more shady coins. Security. Obviously, security is very important. Crypto is huge now. People are getting into it. Lots of scams out there, and it's become a big target for hackers. Leading exchanges, even like Binance and KuCoins, have been hacked in the past, resulting in tens of millions of dollars in losses. So there's that. While exchanges often reimburse those coins that are stolen, nobody wants to be in this position in the first place. All right, so nothing's like, it's not impossible to hack like an exchange. It happens. People have done it. So what I recommend, and actually what they're recommending here too, is you can minimize your risk by spreading your crypto purchases across multiple exchanges. I have multiple exchanges I use. At first, it was not just because of this. It was just because certain coins are on certain exchanges. But this is a nice little added sense of security. So say one exchange goes down, one exchange gets hacked, one halts the trades at one time, you have these other ones already set up ready to go that you may already have crypto on, or fiat currency that you would like to deploy. So it's just another little security thing that like helps you out. So instead of losing like all your eggs in one basket, you have it spread out a little bit. The only issue really with this is trying to keep track of where things are at. So it does become a little bit of a problem, but that's neither here nor there. Make it a habit to move your crypto holdings off an exchange default wallet to your own secure cold wallet. That's another little great security tip. You can always put it in your own wallet. That way it's not just sitting on an exchange waiting for hackers. Again, How often do they get hacked? Not very often, but it is possible. These are storage options that are not connected to the internet, making them nearly impossible to hack. Or, if you lose your thumb drive, that's a problem. Although you need to carefully record your passcode, or you could lose your access to your crypto forever. So another one when you're looking at exchanges is the available coins. So if you're just going for the top 10s, they're usually on most exchanges. You don't have to really worry about it. But again, if you want some of those newer projects or those littler project kind of things that are just starting out, some cryptocurrencies will not hold them, and sometimes you have to go even to DeFi to get those. So carefully consider the cryptocurrencies available on a given exchange. You might be perfectly fine using a crypto exchange that only trades a few coins. Conversely, if you're a crypto fiend, you may want access to all the more than 600 available at gate.io. I've never used that, so I can't say anything about it, but Qcoin has a ton. If you're, again, trying to go for centralized, decentralized exchanges have everything, so you can find that pretty much anything you want anywhere. But again, be a little bit more cautious using those. Also, you want to look at the trading volume, because if there's not much liquidity, you might get stuck holding stuff for longer, or taking a less, or buying for more or selling for less than you want because of the liquidity. So the availability of coins alone isn't sufficient if there is no trades happening. You want to verify there's sufficient trading volume in your target coins to ensure liquidity. Again, note, low volume markets could cost you on sells. If there's not a lot of volume and you want to put an order in, that's called slippage. You could end up buying at a higher price or selling at a lower price than you want. A lot of these exchanges now do offer limit sells though, and orders. So you can always place that, and then, I don't know. But it is known that if you put an order and you're kind of just waiting for it, there is that little bit of slippage that you could be paying a little bit more than you would like. And if that's not a huge thing if a coin's more expensive and you're not putting a lot of money. But when these coins, like especially like super alt, like small coins that are like less than pennies, that could add up very quickly. If you're an advanced crypto trader, you can use limit orders, which can prevent slippage by setting a hard price and margin. Again, you don't really want to, but limit orders are great, but again, they're only on certain exchanges. Additional resources, again, this is very important. I definitely recommend using them because it just adds to your knowledge. It just makes you a little bit more confident, a little bit more proficient in the area. So if you're just getting started with cryptocurrencies, look for an easy to use platform with plenty of educational resources to help you understand this complex, rapidly developing market. New stuff's always coming out. New coins are always coming out. New projects are always coming out. It's great. So like crypto.com does stuff. They put out blogs all the time. What was the other one? Coinbase also does great little ones. I think on crypto, no, it might have been Coinbase. I think you can also get like rewards for doing education. Like when you finish one of their courses or whatever, you can get like diamonds or something. I don't know. It's just a fun little add-on there. Accessibility is the last one. Don't assume that an exchange is available in your country or even your state just because you can access its website. Many states and federal governments are still figuring out how exactly they want to treat cryptocurrencies from a legal and tax standpoint. So yes, there's some states, even in America, that just you can get access to it, but in other states you cannot. Same with, there's certain exchanges that are available in certain countries that we don't get, and then there's things like, I don't know, probably in China where you can't access some of these exchanges just because they've locked down on cryptocurrency. So just keep that in mind as well. All right, guys, if you want me to cover anything specific, comment down below. Let me know. Also, what type of exchange do you use, or which one do you use? Comment down below. Let me know so we can talk about why. Fun stuff like that. Like, what are the pros and cons? Blah, 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 whatever. At the end of the day, guys, remember to stay awesome and keep loving each other. Like I love educational resources. Later.